following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as the old Options Insider Radio Network. And I am joined today on the Option Block All-Star panel by my returning cast of regulars, starting off with the man from the mountains, a.k.a. Uncle Mike Tusaw from RCM. Uncle Mike, welcome to the show, sir.
Always happy to be here.
Glad to hear it. Glad we can make you happy, sir. And also beaming in from the great state of Maine, we have none other than Mr. Andrew Giovinazzi, the Rock Lobster himself from OptionPit.com. Andrew, welcome back to the show, sir.
I, as usual, thrilled and excited to be here on Option Insider Radio, the Option Block. That's me.
Yes. Glad you could compete with Uncle Mike for the sheer level of excitement you all are all feeling. And of course, when you're talking about excitement, you're talking about none other than the Viceroy himself, good old Alex Jacobson from Options Express. Alex, welcome to the show, sir. See if you can outdo the other two in terms of sheer enthusiasm.
Yeah, I'm definitely enthusiastic, but I'm not sure I can convey it as enthusiastically as Mike and Andrew. I spent the morning at Hoffman Estates teaching minis, believe it or not, to a packed house of investors. So,
well, good to hear there's some love for the minis.
Yeah, there's interest out there.
All right. And speaking of interest, I know a lot of you have written in and asked for more interviews. So we're going to do that right now and dive right into an interview block.
The Interview Block.
All right, and welcome to the Interview Block. This is, of course, the portion of the show where we welcome on some guest from throughout the world of options and options trading and proceed to pick their brain for the benefit of you, the listener. And today's guest is Benjamin Lee. He is the founder of Think Trade Think. Benjamin, welcome to the program.
Mark, thank you for having me.
Well, it's a pleasure to have you on, and you're actually going to hit on some interesting topics that I don't think we've ever really delved into before on the Option Blocks. I think this is going to interest a lot of our listeners. But before we get into the meat of the discussion, why don't you give our listeners a quick overview of your background, in particular how it pertains to the options and financial markets?
Okay, great. Well, actually, I first started trading options. That was the first thing I actually started doing. And I kind of progressed from options into day trading because when I first started, I was trading the monthlies. And when I put on a trade, I would sit there and I'm like, okay, great. You know, the trade's working. It's on. I don't need to do anything. So I said, I need a little bit more action. And then I started day trading as well as, doing my options trading. So I've been options trading since about 2005. And, I use it to supplement a lot of the day trading that I do. And I specifically do my options trading within my retirement accounts.
All right, Ben, now I know you're going to be jumping on the old RCM webinar train later on this week, where you're going to introduce and discuss a topic that I think is pretty interesting, and one that we probably don't get into enough here on this show. We get into the specifics of options trading, the minutia, the mechanics, the strategies, and some of the other details that go into making a successful options trade, but we don't get into one of the fundamental underpinnings of trading, and that is, of course, the actual psychology behind it. And that is indeed what you're going to be talking about this week on the RCM Webinar Network. So why don't you go ahead and give our listeners a brief taste, a tease, if you will, of what you're going to be hitting on your webinar later this week.
Sure. And I want to explain why I started focusing on my trading psychology. Because when I first started trading, I was under the impression, like I think a lot of people were, that the only thing that they really needed was somebody's system. This trading system was basically the end all be all. Once you had a trading system, that's all you would need. You would basically make millions of dollars from this particular trading system, and that would be the rest, all she wrote for your financial future. But as I kind of got into it, I realized that the trading systems that I started with always had some sort of thing missing. Right. And then I just decided to move from, basically system to system to system. And the reason why I did that was because I believe that the more that I knew and the more indicators that I could add on to my trading, then, it would improve my trading. Or that's, the line of thinking that I took. But I believe after like the fifth or sixth system, I hadn't necessarily gotten to be a better trader. And so I really had to sit down and, really analyze, what was the constant, through all those different systems. And it finally boiled down to me looking in the mirror and saying, wow, all these different systems and you're the one executing them. And when I finally got to that point, I realized that I really needed to work on my own, psychology. That's when my trading, became, significantly better. So, when I, teach trading psychology, I really believe that it's 80% psychology and 20% mechanics and execution after you've internalized your trading system. And the reason why that is because no matter how great you are, and there's some traders that I know that are quite famous. They've written books, and we get to talk on a pretty consistent basis. And he still deals with his psychology every single day. Because, the things that kind of go on in our lives, whether it's, things that go on with our family, our friends, our health, or, our lack of sleep, or, whatever it is, all that kind of compounds into how we actually interpret the market. So what we need to do is to create strategies to create and maximize a consistent psychology level, every single day.
Hi, Ben. Mike Tusaw here. Just to kind of add to that a little bit, you mentioned how things that happen in your life on a daily basis can have an effect on your trading. Maybe elaborate on that a little bit if you could. So for example, let's say that I'm fighting with my wife and my marriage is on the fritz, or my kids are having a hard time at school. Is that something that could perhaps make me trade more recklessly? Or on the other hand, let's say that things are going really well for me and maybe I just got engaged to the woman of my dreams and my kids just got accepted to Harvard. Would that make me trade too overconfident perhaps?
Yeah. And the major thing that we need to focus on when we discuss trading psychology is balance. Because there's some times where we become too overconfident and then we take on too much risk. And then there's some times where we're not confident enough and we're not executing the trades we should be. One specific example, and because this is a personal story that I believe it'll shed some light on how it actually could happen. There was a girl I was dating, and I found out she was a pathological liar. She actually had a court date on a specific day because she was going to be sentenced. When I approached her about it, she said that everything was settled and it was a mistake. And when I went to the courthouse to see if she was actually there, she actually was there. And although I knew that, all the evidence said that, she was lying to me, but to actually see her there really just kind of ripped my heart out. And that day, I was sitting in front of my computer. I wanted to prove to myself that it wasn't going to affect me. And that day, I lost $5,000. So understanding, where your mental state is, if you're not fully engaged or attentive, reading the market, it's going to make it much more difficult to be successful. And, the way the market is set up right now, the odds are stacked against the retail traders because the commissions that we pay are much higher. Our execution speeds are lower. We don't have the size that, the larger, institutions and banks have. So, we're fighting a losing battle. So we really have to do everything that we can to stack the odds back in our favor.
So, Ben, hello, this is Andrew Giovinazzi. So I just want to sum that up, and I agree with that 100%, by the way, is that friends don't let friends trade drunk. I think that's a way to think about that type of
Now, that contradicts everything that both you and Sebastian have ever said on this show for as long as you guys have been on here.
Well, what we do is we say, do as we say, not as we do.
Oh, now I get it. Okay.
Okay, but I agree with you 100%. If you're not in control of your head and you're not paying attention, you will, you just leave yourself too big a hole, too big an opening for mistakes. Even if you're a pretty smart guy. So I do agree with that, Ben. I think that's a really good thing to toss out to the listeners there too. So,
Well, I kind of like to use the analogy of traders and professional athletes. It's not like a professional athlete is going to have a few drinks before, they go out on the court or the field. Well, maybe Babe Ruth, but that was back in the day. But, nowadays, people or professional athletes, they always visualize the entire, match or game, before it even happens. That's what, traders should do. And I think it's even tougher for traders because, we're going against the best and the brightest every single day, right? We're playing a game where it's rigged towards the bigger players, with high frequency trading, with co-location, with, the commissions that, they pay and I mean, everything that just kind of exponentially compounds, it makes it much more difficult for us to, be successful. And the only way we can do that is to bring the best version of ourselves every single morning or evening or whenever we trade.
Now, Benjamin, I'm curious. You mentioned you started off in options and you kind of got pulled into the psychology realm. Is this something where do you have a background in this? Do you have a history in psychology? How did you get specifically interested in this? I mean, is this something you've been doing for a long time, or did you kind of just get into it through your trading?
Well, I've always been interested in growth and self-development. And that's how I kind of got into the psychology, because I was doing a lot of this for my own life, but I wasn't necessarily applying it to my trading because no one had really talked about it or necessarily shown me the way. So, I started, reading some, trading psychology books, and, a lot of the same themes in personal development and trading psychology were there. So I started utilizing my background and, applying it directly and kind of, customizing it towards trading.
Yeah, now, how long have you been doing it on the professional level? Like, how old is your company? My company is about a year and a half old. And, the reason why, it's a little bit younger than my trading career was because, it really did take me a while to, figure it out. Because, there wasn't somebody that I necessarily connected with that I believed knew where I wanted to go. So basically everything that I've done, I've had to create and experiment, and through trial and error, create the systems that, that I've created. Okay. Now, with that in mind, like, how would you think that psychology is affecting, like, what's going on right now in Cyprus, with everyone trying to thinking that if there's more than 100,000 in their bank account that they're going to get taxed, or just with all the news going on, how do you think that plays a role in traders in general?
Well, I think psychology is a very important part of the market at any time, but specifically when you have an exogenous event like this, whether it's a bailout, whether it's something going on with maybe war or something that is of a geopolitical importance, sometimes you have flight to safety, where you have investors putting into the U.S. dollar or into U.S. Treasuries. So if you understand that particular response of investors and traders, you can at least position yourself to take advantage of those situations.
Now, Benjamin, if someone's listening right now to this and they want to take advantage of your services, should they surf on over to your website? And then what specific services do you offer? Would you give them a psychological evaluation? Would you do an overview of their portfolio or their trading style? How does it work when they come to Think Trade Think?
Yeah, basically what I'll do with them is after they fill out the assessment, I have a trader assessment that basically, goes into detail and in depth about, their history and, where they've been successful and where they need to improve. And then what I do, I sit down with them for an hour and say, okay, this is what needs to happen for you to get to the next level of your trading or investing.
It's a pretty straightforward approach. So if you're interested there, listeners, then by all means, you can surf on over to thinktradethink.com. That's where you can find out more about what Benjamin has to offer over there. And of course, you can tune into the RCM webinar train/network later this week to hear Ben's topic. What's your webinar called there, Ben?
It is the 7 killer trading mistakes that stop you from being profitable.
There you go. You heard it from him first. So tune into that later this week on the RCM webinar network, and you can learn more about those mistakes and how to avoid them. And Benjamin, thank you for joining us.
Hey, again, thanks for having me.
Thank you, Ben.
Thank you.
All right, and that's going to do it for the interview block. And now we're going to keep on rolling right on into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we discuss what was trading, what was catching our eye amongst today's trading activity. And it was another down day on the old street. Looks like the euphoria that was creeping into the markets earlier about Cyprus and perhaps things turning around over there seems to have crept right back out again today, with most of the major indices down about 0.3% on the day today, with the Dow down a wee bit more, down nearly 0.5%. And of course, the VIX cash getting a bit of an uptick up to about 13.74, up fractionally a little bit on the day. Nothing too crazy. Of course, you expect a weekend bump to come back into the VIX cash anyway. A day like today, on top of that, getting a bit of a sell-off. I would even think, perhaps, dare I say it, the VIX cash underperformed today. What would you say to that, Mr. Andrew? Are you deeply offended to your core?
I am deeply offended that the VIX cash underperformed today. Actually, you know what? This was one of Mark's better calls early this morning. He was, we had some short volatility positions, thinking, okay, Cyprus, they're going to do a deal because something is better than basically going broke. So they did the deal. The market didn't like it. And I think we looked at this morning, the actual VIX futures, the volatility kind of cratered like on the opening when the market rallied, but the VIX futures never sold off. They basically stayed unchanged. And this was one of Mark's, better calls. He's like, I got a funny feeling this rally is not going to hold on. And, we had a short-term vol play that we closed. But I think the market does not quite know what to do with this new kind of serious Europe. This new serious ECB, and I think what's actually was a double whammy today. Some investors in the Spanish banks are taking a haircut, and these depositors in Cyprus, and I think an EU minister kind of, of course they always say something a little off color. Well, this is a model for all of the, bad banks that we might have to deal with. I think that got everybody a little rattled. Like, okay, So they didn't quite know what to do, although all small depositors were okay. But the euro kind of closed on its low of the day. So, I mean, what does this all mean? What does this all matter? I thought for our market, volatility at 14%, I still think is like a touch high because we've been trading at a relatively, market's just kind of been not doing much, really. day to day. So the only thing keeping the volatility anywhere is the Europeans.
I'm not sure if you've heard, but upside movements, upside vol, that doesn't matter. It's just the downside vol.
Well, that's the only upside we've had. I mean, the only real volatility, I think, has come from these like 1.5 point gaps. Now, how many more are we left with this year? Who knows? I don't know. But, we either had Europe for a little downside, but I think the market is digesting this and they're not really quite sure what to make of it. And, the volatility did get a little bid this morning. The VIX did pop a little bit, but we never really saw that heavy future buying. And my guess is as the market says, hey, you know what? It's going to take a little while. It's sort of like a hand grenade goes off, but it's a little one, and everybody's sort of recovering, as they start to figure out what all this really means, because basically the European countries are going to have to, rationalize their budgets and do all that kind of stuff. We're going to have to eventually, and just take the fact that you're not going to grow a whole lot while this is going on. And there was still a couple of holdovers like Cyprus who, they had banks that had to go. The problem is in Cyprus, the banks were, 50% of the economy. So that was, I don't see that as a bigger problem as some of the other, in the other countries. That's not really what the issue is. The issue is they just have to make sure they trim some budget deficits, and then all the assets that most of the other bank holds will be fine.
Let me ask you this, because we don't typically get into this on a program like this. We typically focus on vol levels and option strategies, things like that. We don't dive.
I forget about that.
We don't dive into the fundamentals too often. But I'm kind of curious where you fall right now. A lot of people, hemming and hawing about all-time highs and whether we're going to retreat from there, whether we're going to rally from there. Where do you fall? Since I know you are a diehard fundamentalist, where do you fall on this debate? You think we're headed north after this brief Cyprus fallout, or you think this is the catalyst for the turning point? We're heading farther south from here.
I think we head north from here as long as the fundamental process of like the U.S. government budget deficit going south continues. As far as Europe keeps tightening the budget stuff up. I mean, all this austerity and stuff, everybody's moaning and groaning, but it has to happen eventually, and you got to have like common sense labor laws and all that kind of stuff. So that is a bullish. Those are all trends I believe. Just because look what the market has done with that news, right? We just raised taxes and nobody cared, in the first quarter. We passed this sequester that was supposed to be so horrible that everybody was going to puke, and we keep rallying. So you're looking at, kind of reading the tape, and you're saying, wow, as long as the government kind of gets out of business, so to speak, we rally. And every time the government tries to get back into business, we don't. We fade, like with this Cyprus thing. Like they had to do some nasty thing. So what does that do for vol levels? I think it's as long as these things stay like this, I think pressing through like a 12 VIX will always be tough. Because it does not have that clear. In order for the vol to really come in like that, you got to think of when those times were, when we had super low VIX, like mid-90s, when we kind of had that solid growth and government deficits were going down and the EU was growing, and all of a sudden Asia was becoming a power, right? Like in the early 90s, we had that super low vol. And then you get the vol, we had the upside vol spikes when the market started ripping. But I mean, we're up like 1.5%, 2%, crazy days like that when we had the internet cycle. Then you go back to like 2005, 2006, 2007, home prices are going to go up forever. We were actually containing our budgets somewhat at that point. It was the deficit was starting to reduce again. The Iraq thing was going better. Like you had all these big positive fundamental things that started to clear the picture up. And we had those real low volatility numbers. And I think what we're in the midst of right now is we're in a long volatility rationalization until there's no guarantee we're going to get that kind of forward-looking clarity again. We've kind of been moving through it doing fits and starts, but the market keeps going up. Now, if all these things stay, if Europe stays on track, Asia is still growing, and it's a positive force. Even Africa is growing. I mean, the U.S. is producing all this oil. There's a lot of fundamental things. I do think, though, this Europe and the debt issue, we have not seen the last of it. It continues to come up. It will keep hitting that 12 VIX every time everybody thinks everything is good. Maybe we'll see 11 again, the 11 handle, and then that usually takes a few months, and then some stupid thing in Europe or some other debt issue will perk its head up, and everybody will freak out again. But as you can see now, the freakouts seem to be a lot less. The vol doesn't go as high, it doesn't spike as high. But if Italy doesn't get a ruling coalition soon, all of a sudden, they can't pay their bills. Where does volatility go? We're back to having the 25 VIX again.
Once again, back to Italy. You always bring it back to Italy and Berlusconi.
I'm Italian.
I think that's just your favorite topic,
That's what you get when you're Italian.
You got a Giovinazzi, you got a Longo on the show. We always end up in Italy in some way, shape, or form.
And you know what was funny? Like in 2005, think of it, 2005, 1990, 1990. If some Italian was getting elected, did the market
nobody cared.
One tick? I mean, come on.
We had bigger problems. Yeltsin was dying every third day. There's a lot of other stuff going on that was kind of fun. Yahoo was going to 400. AOL was going to 400. Bigger fish to fry than Italy.
Yeah, I mean, I just. So can those things repair? I mean, if these trends continue, sure, volatility can get lower. And to be honest, I think the market is not like, is it crazy? I mean, we pretty much thought for the last couple of years we're just not going to have a lot of growth, and somehow companies still are, making some cash. The thing I'm looking at every time is how fast, like something like the TLT is a good indicator. The volatility came in today in the TLT from about 12 to 11%. So the immediate upside melt, like to the mid 120s again, doesn't look too likely. So just looking at some vol indicators, like, okay, well, the vol came off a little today. It did not totally deflate like we've been accustomed to this year. Like we solved the problem, and vol deflates. So that's kind of, I think, where we are. So you want to see if we're going to rally? Let's see if you can start hitting some new lows on the Treasury. We have another good jobs report, and that will be the writing on the wall for what Bernanke has to do. He's not going to be able to keep buying bonds forever. That will most likely, how they segue out of that will be our next little volatility discussion.
Speaking of segueing,
right down when we hit 11 again.
Speaking of segueing, before we go though, Alex, I do want to hear your chiming in. I know you were very busy today educating the masses about minis. I think we'll save a little bit of that discussion for the Xpress Block. But what, if anything, caught your eye in today's activity, or what was the big news being bandied about the desk today?
Well, as I said, I was out this morning with a group of very active investors, and I got to tell you, I don't mean to be contrarian here, but I think Cyprus, Spain, Italy is temporary noise. I think it's part of the 24-hour news cycle. When I went to broker training school in 1980, we had this expert come down. In fact, he was teaching us investor psychology to sort of fall in line with Ben's presentation. But he said, when people ask you what you think the market's going to do, you always need to be positive. He said, look, I'm always long-term bullish. I think it's going higher, but it could correct 5 to 8% at any time. And as soon as it was out of his mouth, he said, you could use that every day of your life. Vol's low. I think the economy's improving. I think the wealth effect from real estate will come back. Hopefully it doesn't get overheated. Kind of said this before, and I think vol will get a lot lower. But I think Cyprus is noise. I just think it's noise. You had an economy. Andrew mentioned how big the banking community was in Cyprus. Cyprus was the banking community, and who didn't figure out that would end bad? What were people talking about today? They were talking about Blackberry. They were talking about Nike, ironically. Apparently, I'm not a golfer, but Tiger Woods is supposed to be back number one. But they were talking about the disappointment from Blackberry, how the rally in Apple began the day they announced the Galaxy 5, and how Apple's moved, I think, $45 from that level. What else were they talking about today? It was really a conversation of stocks more than indexes. This group had lots of questions about futures trading and the E-mini options, which I thought was interesting, because that is not a topic that comes up a lot. And I think if we had more news going on, I don't want to say we'd be talking about volatility less, but it's kind of easy to talk about volatility every day because we've had quiet news days. I mean, we have a market that has been up a little less than 1% a week so far this year. We've got a good market. We've got decreasing vol. And, do I see anything on the horizon that's going to derail that? It even looks like Washington is getting itself, I don't want to say more together, but a little less contentious. And the economy's getting better. So I think it's going to be a good environment. I think vol's going to decline. And I think we're going higher. Cyprus an issue? Nah.
There you go, listeners. There you have it. 2 of the Option Block All-Star panelists chiming in for some upward movement ahead. So perhaps that's a sign that this is just a blip on the radar before yet another massive bull rally on the horizon. But speaking of things on the horizon, we have to close out the old trading block and keep on rolling right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and that funky tune means that it is time once again for the Odd Block, of course, the portion of the show where we dive into some of the interesting, abnormal, unusual options activity that's lighting up the old tape. And we're going to kick things off today with a big trade going up in DVA, that is DaVita Healthcare Partners Inc., ticker symbol DVA. This is the name that does around, sub 1,000 contracts a day for the most part, doing nearly 7,000 today, so lighting it up from a DVA volume perspective. They closed today at $117.90, just up fractionally on the day. So it was an underlying move that really seemed to spur this activity, but a lot of put buying love out there in DVA. I should mention before we keep going that, of course, if you want to play the home game and follow along with us here on the old Odd Block, then serve on over to theoptionsinsider.com. You can find all of these alerts we're going to discuss today and much more in much greater detail. And speaking about greater detail, Andrew, looks like we had someone lighten up the 110 puts, picking up about 5,000 of them today out there in DaVita.
Yeah, that's a weird one. Like the DaVita, isn't this kind of dialysis franchise type company? I see like the trucks around and, kind of a steady low volatility stock. It's like, what was the 10-day implied volatility is 12%. So it's not like this thing is some sort of flying, medical company. It's one of those just companies that seem to make money in and out. So this purchase was is it a defensive purchase or is it a spec purchase outside the earnings cycle? So that's for me is a tough one. I really don't, because that really buying those puts in that low volatility stock I would say is a pretty big reach.
Yeah, I'm looking at this one here. I mean, especially such near term puts. These are only going out, a few weeks now here. Whereas I'm looking at the chart here on DVA. This one's been hovering around these levels for quite some time, at least since most of the past, since last year. It got down to 108 back in December, but since then it's been pretty much just moving steadily northward ever since. Got up to 120, looks like 125 at 124 at one point as well. So this guy perhaps is just drawing a line in the sand here at 110, saying this far, no farther. I own some underlying, don't want it to drop much farther below this one. But you're right, this isn't a typical name that you would see and say, oh, this is a high flyer, this is worthy of a spec, a very near-term downside spec, or this is the name where you would be concerned about a very dramatic swing to the downside. So this could perhaps be the definition of unusual activity. Someone perhaps knows something and looking to hedge ahead of that time, or it could just be the most blasé hedging some underlying, and for some reason he decides to go with April.
Right. And you could trade this like maybe like a ratio put back spread or something like that, where, if you get the move, fine, the thing kicks in. If it doesn't move, as long as you can trade it for a credit, something like that, you could create a trade around this probably and not take any real delta risk. But I found it, I thought, again, an interesting chunk of volume to say the least, and something you probably wouldn't expect that kind of volumes. Thus, You're right. Fedora time.
Yes,
Fedora time.
Definitely Fedora time. Certainly qualifies as unusual. And speaking of unusual, we're going to keep on rolling to our next one. Thomson Reuters, of course, ticker symbol TRI. They closed today at $32.40, up about 0.5% on the day. This is another name that typically not exactly lighting up the tape, doing about 600 contracts a day, doing almost identical volume to the last name we just discussed, 68.34 on the day. Perhaps there's some correlation there we're not aware of. But TRI, the story a little bit different in TRI. This was, unlike downside puts, this guy was speccing to the actually in the money, not upside, but in the money, with these July 30s, about 6,000 total going up on the day against open interest of 12,000. So it looks like this guy, with them going up near the bid, looks like the guy is pretty much dumping some of this open position. Is that what you were thinking as well?
I think so. I think he's closing. Thomson Reuters had a pretty good run, so I think this is a closing trade. I was trying to look back for like an entry level, which is always tough because you never know when they get in. But I mentioned Thomson Reuters the day before. It looked like somebody was, putting up a buy right. So it just feels like paper where TRI has kind of made a run. It's trading right at the top of its 52-week range. And you can feel that Mike Tusaw would be happy. Some risk management going on, right? Dumping out some of the longs, writing some calls against stock, something to take a little bit of cash off the table and putting it in your old pocket. And that's what that kind of trade feels like. Yeah,
taking half of his stake off the table, let the other half ride, see what happens. Thomson Reuters, another one, hasn't exactly been, they've had a little bit of a run. They ran from, they were trading about 27 back in November. So over the past 4 or so months, they've had a bit of a run up, trading about $32 today. So a bit of an upside run. And this guy probably taken, like I said, has come off a little bit since then, perhaps wanting to take some of that off the table and then live to fight another day, as they say. Speaking of fighting another day, we're going to keep on fighting with the next up. We have GSM. This is, of course, Globe Specialty Metals, and they closed today at about $14 even, down nearly 1% on the day. Another name that really doesn't do any volume to speak of, 200 contracts a day, doing a whopping 1,000 today, so 5x. And pretty much, let's look really quick. I think, is all of that? Yes. Oh, no, all of that except for 4 contracts came in one trade on these June 12 half puts. Someone buying 1,000 of these things for 35 cents. I'm sorry, 1,005 of them for 35 cents. So looks like there's some open interest on this strike, though, too. So it could be some closing going on here in GSM. Is that what you're leaning towards here, Andrew?
I thought it looked like they had some kind of risk reversal on, and they might be taking it off. It's kind of in the middle of its range, a little middle top, somewhere in between there. So it looked like a little bit of unwinding of a risk of starting, basically. I think they're trying to piece it out slowly but surely. Maybe they got the calls financed, who knows. But overall, them buying the puts back instead of letting them go out worthless, I don't know for sure yet. I'd like to see, how it traded a little more. But it felt like kind of the open interest, it felt like a little unwinding in there. I don't believe in coincidences. So
yeah, if you look at this one, they have about 2,200 open on the June 12 half strike, 2,700 open on the June 15 strike. This is the name where there's really nothing else open anywhere. So this is a pretty easy one to intuit that those two trades
again.
Are going
in
together.
Another stock, it's a $14 stock trading at a 22%, 10-day vol. Doesn't really move much. So, it's one where that's where it feels like it's just closing. Where is it going to go? I don't know enough about the company, but it looks like somebody, again, probably taking a little bit of dough from a risk reversal they put on and cashing in.
Yeah, who knows? Could be a strangle, too. I mean, this guy, I think things kind of been in this range for quite a while, the 16 to 13 or so range, so that's not a bad strangle sale either.
Yeah, and I think we covered a GSM trade about 2 weeks ago, so I think, you know what, it very well could maybe buying that strangle back, because I'm almost positive if I look back into my I like having this quiver of all these names now. It's kind of fun to go back and look at them.
The Options Insider Unusual Activity Database, if you will.
If you will, yes. I think that's a good I actually wrote about this a week ago. And as I look at it, now that was in September. somebody was buying September 12.5 puts back then. So it wasn't a strangle, it was September puts back in the day. So again, I think, maybe somebody just successfully sells puts and buys them back, and it seems like it's working for them. So that could be the play, because we haven't seen the 12 handle in here since, middle of last year.
Yeah, that was a closing buy we reported on last week too, with put buyers out in the SEP 12.5 range, buying 2,000 of them back for 70 cents. Another one with the open interest was 2,000 on that strike, and a name that does a couple hundred contracts a day. Not hard to intuit what the intent is behind that activity. People always write in all the time, how do you guys know what these people are up to? How do you determine it? This question, that question about usual activity. This is the name where it's pretty straightforward. Of course, if you have questions like that, I think you should swing by our unusual activity forum coming up at the middle of May here in Chicago. Surf on over to theoptionsinsider.com/events for more information on that. But now we have to keep rolling with the rest of the show. I know the Viceroy is chomping at the bit to get in here on the action. So, of course, I want to hear about what's going on in the minis. So I think we're going to keep on rolling right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, Mr. Alex, you told us what was catching your eye over at the desk, but you also mentioned earlier in the show that you were out there dealing with the masses, instructing them on minis today. So perhaps let's start there. What were some of the feedback? What were some of the questions? What were some of the comments you were getting from these users about the minis? Were they excited about them? Were they concerned? What was the general tone of the event?
So these are active users. So their questions candidly were on bid offer spreads and transaction costs. That came up a lot. Not surprising, because I think that's one of the issues that we, the industry, are still trying to figure out in these. I had a real interesting question from someone today, and he was going back to my exchange experience. I'd been introduced as having spent my whole life in the industry and at exchanges, and had an interesting question today from a man who was out there, and he said, essentially, do I think rebating, what's keeping transactions costs low, is impacting bid offer spreads? And I kind of scratched my head for a minute, and I sort of go back to a presentation I heard on Bloomberg a couple weeks ago from a guy I respect a lot, Laszlo Barini, and he was talking about the fact that high frequency firms made, I think he quoted $8 or $9 billion last year. And a lot of that has got to come out of the spread equation. So I kind of shook my head and said, yeah, I mean, there's kind of no free lunch out there. And the early days of minis, I think these bid offer spreads are a bit too generous. The only mini that seems to be getting good traction with the group I was talking to was Apple Computer, and that seems to have some trade lift in general lately, rallying this $40 or so in the last handful of days. And in fact, Apple earlier today was up when the rest of the market was down, but didn't get a lot of traction when we talked about spiders, didn't get any interest, candidly, when we talked about Google. I just think Google seemed, for a lot of these active people, to be a play it when it's earnings week, and other than that, it's too expensive. And we're trying to make the case for why the minis would change that. Hey, another couple of names that came up today. It's a shame Mike isn't here, but had a couple Ford questions, which is somewhat ironic because it's not a name that comes
Ford
up.
For the minis, $12, yeah. $13 name.
No, just general Ford questions. But I also didn't get back to the minis. I sort of digressed there for a minute, but I didn't get a lot of questions from the folks saying, when will we see IBM? When will we see Intuitive Surgical? I think when you put up the chain, which is what I did and talked about it a little bit, the volume numbers and the bid offer spreads are still not what I think we would all like to see. So I got a lot of very good questions, but the general impression was they weren't rushing to embrace it. Now, again, this is a fairly active crowd. These were people who had lots of trading experience, and I think there was a little bit of cynicism in the room.
Interesting.
I talked about my own position, my 150 shares of Apple, and how it made more sense to sell the Mini because of commissions but they got into we got into a commission discussion, which is, kind of unusual. It doesn't come up much, but I also think, the question of transaction costs and friction when you look at the Mini is, clearly something we're all still scratching our head about and trying to figure out.
Definitely. It sounds like that was a very informed audience. So I'm curious to hear perhaps some more in coming shows of what they're thinking about the Minis, and as you keep going back to the OX customer base, what their responses are. I love that question about the bid-ask spreads and payment, because that's a bit of a no-brainer, but it shows that the retail is learning how these things really start to interact and how at the end of the day it still affects them, which is good. It's good to show that's an evolution of the marketplace. I think that's a good thing.
And it's a legitimate question, and I think sometimes a lot of people who teach options, especially if they're distant from the brokerage community, don't hear a lot of questions like that. And the overall question of friction when you're trading small instruments is obviously it's a genuine question. And truthfully, I had to ponder it for a little bit, and nothing's free out there. And it's kind of interesting that investors are beginning to think about that.
I love that. It's a good sign for the marketplace when they're realizing how those things go together. But speaking of going together, we have to keep on going into our final segment, Around the Block.
Around the Block.
All right, welcome to Around the Block. This is, of course, the portion of the show where we tell you what we're watching, what we're keeping an eye on for the coming sessions into the rest of this week. Mr. Andrew, what is catching your eye as we roll into the latter half of this week?
I'm looking for volatility, looking at like iron condors, stuff we're kind of selling volatility, but sort of staying away from at the money. Not very big in the vol products right now. We've been doing a few things, but nothing. It's calmed down a little bit. Once the VIX gets this low, there's not as much oomph in the trades. And finally, just watching to see if really the treasuries, something like the TLT, can to sell off again. And really which I believe that product actually for investor sentiment has become is a great thing to watch. When that thing is kind of tanking, at least it has been recently. It gets bid up, and then when it starts to tank a little bit, we tend to rally. I don't know if there's one's kind of causation or connection, but we certainly seem to scream when the TLT goes south. So we'll see what happens. But that's kind of what we're looking at this week.
All right, and Mr. Alex, what are you paying attention to for the rest of this week?
Blackberry earnings scheduled on the 28th.
Yes, the 28th. Remember, before the bell this time, not after. I love when they throw in the before, because it kind of just mixes everything up for so many people. And by love, I'm saying that ironically. I think they should all be after the bell. It's just so much easier. It should be one way or the other. Everyone should have to be before. Everyone should have to be after. There should be some sort of consistency to it. This mixing it up is just kind of annoying, I think.
Yeah, or you could do what Google did and just accidentally release
just
at
2 o'clock on a random day.
Yeah, always exciting for the market maker community.
Now, are you an old school BlackBerry guy? Are you one of these BlackBerry RIM devotees, or are you kind of just watching this from a curious bystander perspective?
You're gonna laugh at this. I actually have 3 working phones because of sort of who has which number, and I have an iPhone, I have a Droid, and I have a BlackBerry. So I have all 3, and I can tell you and different services as well, Verizon and AT&T, and BlackBerry was clearly the best enterprise product, but this, the new product, Goldman downgraded them, and as I said the other day at dinner, Apple's up $40 since they introduced the new Galaxy. So. That's in the Droid area, but it looks like this new Blackberry, which they've pinned their hopes on, is turning out to be a non-event.
Yeah, retail, they're trying to aim at some high-end retail. I'm using the options terminology, but, the non-enterprise audience for phones with this as well. And it seems like this is pretty much a big shrug for the most part on the part of a lot of people. We're looking here. It's at Blackberry closed today at about 14.25, down about nearly 5% on the day. Most of that coming out that Goldman downgrade, and looks like they're pricing in about $1.60 or so in that 14.5 straddle. So of course, there's a quarter of juice. You still pricing in about $1.35 worth of juice here on the weeklies with the earnings coming. So people are expecting a little bit of movement, perhaps about 10% or so out there in Blackberry land. So intriguing stuff here in Blackberry. I've kind of seen this device a little bit, and I kind of tend to fall in that same camp. Rare when Goldman and I see it eye to eye, but this is kind of a bit of a Me Too device. It plays catch up. It gets them somewhat on parity with the other ones, but the problem is you can't just play catch up and expect to regain all your market share. You have to really do something different and better than what's going on in Android and iPhone to really make yourself relevant again. And I'm not sure if they've done that yet, so we'll see how this impacts their earnings again on the 28th. Not too many big earnings announcements really coming out to watch anymore. We're kind of on the post part of the earnings season here, so not too many other big earnings to watch. BlackBerry being one of the last. So I take it you're not going to get a Z10 then, Alex?
Not signing up for a Z10, and if it's a quiet news day and they disappoint after the close, I think they're going to get crushed. And if they surprise, I think it'll be amazing. But we'll see how busy a day that is. Again, as I said, I think a lot of what's going on is noise, but I think everybody's focused on BlackBerry right now, and it'll be an interesting week.
Yeah, these downside puts, seeing $1 out of the money puts 13.5, with 3 days to go, trading at 156 vol and about 50 cents. So yeah, there's a lot of juice to the downside here, not so much to the upside. Not many people expecting a big upside surprise from BlackBerry. Perhaps that's when they fade them and they come up with the upside surprise after all.
When you least expect it.
There you go. Thank you for that, Alex. And that is going to do it for our Around the Block segment. That's also going to do it for this episode of the Option Block. I, of course, want to thank our guest, Benjamin Lee, for joining us today. And, of course, you can listen to his webinar over there at RCMAM later this week if you want to hear more about trading psychology. And before we go, of course, I'd like to check in with all of my cohorts, my partners in crime, to see what they have coming up in their respective necks of the woods. Starting off with you, Mr. Andrew, what is coming up in the land of the pit?
Coming up in the land of the pit, we have our gigantic, fantastic event in New York with Mark and Russell Rhodes on Saturday, April 20th, which, again, and if you went to our blog today, Mark had a really good call this morning, with basically the futures not happening. They basically really didn't decline, even though the vol was. So that looked a little bit, made him queasy feeling. But looking at how the VIX trades, this is a great seminar for kind of basically using the volatility products to really gauge market sentiment at any one time. That doesn't always tell you something, but every once in a while it gives you a good little tidbit. So definitely worth understanding how those products work, because I think by and large there's a huge disconnect with people on what they actually do and measure versus what people think they do and measure. So Mark with Russell Rhodes, who wrote a great book on the VIX from the Options Institute, are teaching this class in New York. So hop on over to our website. Just go to optionpit.com/events, and you can register. And if you're an Option Pit subscriber or client in any way, shape, or form, I believe we give you some sort of discounty deal on it.
The mystery deal. Surf on over to optionpit.com and find out what the mystery deal is.
It is a Mark deal. It's a Mark mystery deal. Depends what day it is.
All right. Thank you for that, sir. And Alex, what is coming up in Options Express Land? Another minis seminar, perhaps?
Minis on the 28th. We'll be doing the webinar at noon Chicago time. Tomorrow, the 26th, a couple of real exciting webinars. Marty Kearney, my old buddy from the SIBO Options Institute, is going to be doing a spread webinar at 1 p.m. And then at 3:30, I'm doing Ideas Hub. And, as Andrew said earlier, he's looking for iron condors. We got the industry's as far as I know, first brokerage-based iron condor finder, and it was kicking out ideas in the IBM today, which is interesting. One of those names that the CBOE calculates the volatility index on, but the number one return was an IBM condor, which isn't a name that's normally up there. It's normally dominated.
Yeah, you don't hear IBM much anymore.
Yeah, and it's an easy company to trade. It's liquid. It's a household name, and earnings surprises have, when they've been bad, have cost a few dollars, but it's stuff you can get in and out of real easy. So that's what's going on.
IBM, another juicy name, closing today at $210, almost $211. Very priced. I think for a lot of the typical retail end user, people have forgotten what IBM even does. They sold out of most of their computer businesses. They're mostly in the technology and services area of the business. But if you're on the enterprise side, IBM still very relevant to you. An interesting one to watch. Yeah, IBM not popping up on anybody's charts much these days from an options trading perspective. So it's good to hear they're still lighting up the tape on the old Idea Hub. And last but not least, I know I mentioned it earlier in the show, but if you are going to be in Chicago on May 15th, then we want to see you at the CBOE for our Unusual Activity Forum. A lot of great guests, a lot of great speakers, a lot of great freebies for you guys when you sign up and register and come on down, including a floor tour and access to a bunch of great options, analytics, and tools and software to help you do exactly what we're going to be talking about at the event. Find and trade from unusual options activity. So it should be a great one. TheOptionsInsider.com/events if you want to learn more and register for that event. Only $99 for all the stuff we're throwing at you. Should be really exciting, and space is indeed limited, and a lot of people say that. We really do mean it. This is a very very finite amount of space for this event, so get in there before the last seats are taken. And that's going to do it for this episode of The Option Block. But of course, all of us here on the Option Block All-Star Panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this show and making it such a success. And we'll see you next time right here on The Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.